Good morning, one and all. I hope you are well. So, this morning I have three pairs on watch, and those are pound dollar, euro dollar, and pound Aussie. So, I would argue my favorite of the bunch is pound dollar. So, why am I looking at this pair? I am looking at this pair for a potential, probably a shorter term move to the upside because we have this confirmed morning star formation on the weekly, which tapped below this area of significance and then pushed up. So potentially, if we just analyze this on the weekly chart, I'm looking for an impulse correction continuation to push higher to take, with the idea that price will likely find its way up to either this correction here or up to here, because this one narrowly failed to retest the back end of that. So that is a point of note. And I've literally just noticed this on the fly. Given that this is the last day of the month, even if this um, active monthly candle there was to close as it appears at the moment, that would be, even though it's bearish, that would look like a washout candle. That would be a low test candle which broke below here. What the story that this candle would be telling me and telling a lot of the bigger players is that we broke below here, washed out a load of liquidity that was sat below there, and then pushed to the upside. So potentially this monthly close, if it was to close like this, and of course if we got some momentum to the upside, it would look a little bit more bullish, would potentially give price the momentum to push higher into these areas that I was talking about. Is there any evidence to support that on the lower time frames? Well, on the weekly chart, you can see that we're kind of stalling in that area. And the clue for me is, how are we moving down? So we've had if we look here, price, there was a bit of consolidation here. Then we got the commitment, impulse, correction, impulse, another correction. This just looks like we're correcting to move downwards. Downwards, is that a word? Yep, I think so. To move downwards to potentially give us another continuation to the upside, okay, which is kind of to some extent in alignment with what we're seeing on the DXY. Okay, the dollar index, we can see this very clear structure forming. Okay, so previously we had this confirmed evening star on the weekly, the dollar index, and then we have this kind of structural approach forming now, which may give price the legs to the move to the downside. Of course, if that happens, that's dollar weakness, which implies dollar pound strength. Okay, we've got something similar happening on the flip side on pound dollar, which makes contextual sense to me. So on the 4 hour, we can see the price is coming down, or appears to be coming down, into this area by way of a 1, 2, 3. I like the fact that I can see this even on the 4 hour chart before I've drilled down. We have noticed these highs here, and notice that even that little consolidation there, all of these have failed to retest the back end of that. Okay, so we have the mechanical structures that we look for again. We have this low which breaks below this one, but leaves a gap to the retest of the back end of this, and this little footprint that was there. Okay, so this to me at the moment is looking like a potential three-touch reversal structure, because we have this. Notice I haven't connected my trend line to there, because typically speaking, within a structure, the points tend to be sharp, and you can see here, sharp, sharp. Okay, this one isn't sharp, and we didn't move away from there with any momentum either. So this is telling me that this is the structure, these lows here, which would make contextual sense. And then we have this structure here. Okay, you could argue that this wasn't sharp, but this is just a middle section overall. If you connected it from there, then that would make sense, and you would have the middle section there, and then potentially we have this 1, 2, 3 last leg down to there. So what I'm going to be looking for from this pair, because of all things considered, is I'm going to be looking for, either if we tap into this area, okay, and we get either a 4 hour risk entry, so a low test candle on the 4 hour chart, or a retrace candle on the 4 hour chart if we tap into it correctively, or two 1 hour low tests. Okay, so the low test candle that you'll be familiar with, given that this would be a 4 hour. This would be a 4 hour structure. Okay, so I can see the structure of this on the 4 hour chart. So that's my entry requirements. If I don't get that for whatever reason, or we get there very momentously, if that's even a word, then I'll be looking for a push up followed by a 5-minute continuation, and then I would have about 6% to work with to there, but I wouldn't anticipate price stopping there. I'd be looking to target because the structure would be very clear, I'll be looking to target this high here, okay, for something in the region of 9.5%, and I would use depending on which of these entries we got, if any, I'll be using the mechanical management tool and targeting 90% of the range, which is where price can pull back deeply, even if it's going to continue in the forecasted direction. And we have an alert set down here, just below, just above this area of value. If we don't tap into it, then I don't need to look at this pair. So euro dollar is, let's have a look at this. This is going to obviously be quite similar, but I prefer the structure on pound dollar. Okay, so we have a similar thing where we've tapped into. This might not be a standout, but if you look at this move here, all of this originated here, okay? And it was also the breakout. After we broke out of that, this was the little footprint that was left before price started moving up. So that's an area of significance. What happens? We tap into that area, break below, move to the upside. So we have the confirmed morning star formation on the weekly on euro dollar as well. I prefer pound dollar a little more because if you look at if we just move this to the side, so I like the fact that we're impulsed up and the subsequent candle is more corrective, whereas with euro dollar you can see it's a bit more bearish there. Okay, but obviously this isn't closed yet. I'm just looking at the monthly. The monthly would look like that by the end of the day if it was to close as it is. Okay, so that even that on the monthly could be a confirmed morning star formation, or sorry, the start of a premature morning star formation before I move to the upside. I'm just factoring these things in, given that it's the last day of the month. You can see here that what are we doing? We're near missing to this low. Okay, we got to the area by way of a reversal structure. Then we had the impulse correction impulse. I'm just seeing this as a potential correction for another move up to take out, to potentially maybe tap into that area. Okay. So if we just zoom down a little bit, it's likely, if you look at this bearish candle there, that will likely give price the legs to at least come down to this area as well. And what I like about pound dollar is the structure is a bit clearer. If we just look at this in the 4-hour, you can see the structure. Maybe you can't. These are things you start to see after you've been doing this for a little while. But what you can see is that we're leaving gaps. Okay, so we've got this low. We've got this low, which we've just formed, which broke below this low, but left a gap to here. Okay, and if you look at this, where did this momentum start? When we started impulsing by way of very small corrections, okay, and it was also sharp, was here. And the fact that we're gapping towards it and getting that mechanical mechanical structure, not thought process, mechanical structures that we look for, that breaks below that but leaves a gap to that. The origin of all of this was here. We don't necessarily need to come all the way back down to here because this was the retest of the back end of this. Okay, so we have this slightly strange looking structure, but it retests the back end of that. So this is below this high here, so we don't necessarily need to come down to there, which also adds weight to the fact that this is the area of value. Okay, so what I'm going to be looking for, just another thing to touch on, I'm specifically looking for a break below here and a push back in. And you might be thinking, well, why not just a tap? Well, typically speaking, when we're building volume, if this is an area of value, we don't usually start to build volume just above it, if that's what we're doing, right? If it was to look like that, if we were to push down from there, we don't tend to just tap an area and then do that if we've built volume just above the area of value. What that usually means, and this might be difficult for me to explain, but I've seen this so many times that when you see this just above an area of value, it just doesn't make sense for price to do that. And the reason being is because I can't remember any examples of that in my trading journal where price has then done that and then done that. What it usually does, if price is building volume just above an area of value, is it usually breaks below and then breaks back in and then does that, okay? And then that makes contextual sense, because if we were to measure this little impulse here and we were to assume that we got an impulse correction continuation, so that completed its move, that would make sense, because then this would be a completed move, which would warrant the start of a new move, okay, if that makes sense. So what I'm looking for in this instance is a break below the area of value, specifically a break below, then a push back up, followed by either a 5-minute or a 15-minute continuation. And then depending on which it was, I would look to get long on the break or within it. And then as a first target, we would have about 5% to work with. But again, I wouldn't necessarily anticipate price stopping there, just because by that point, if it's tapped, it broke below that, and we've had a proper washout, and we've broken below all these lows here, we've pushed back up. I don't see what reason price would have to come all the way back, come all the way back down. That would likely, the wheels would likely be in motion there, and then the higher time frame candles would likely look a lot more bullish, and that monthly candle that I was talking about would likely look more bullish as well. Okay, so I would be targeting up there. Okay, and once again, I would use the mechanical management tool, which would give us something in the region of 8.5% to work with. And you can see now, even now, you can see that price starting to wick a little bit potentially. We've got 12 minutes of this candle left, so this could be just people being trapped into the buys too early, whilst the liquidity, which is still down here, is dragging price back down. We shall see. We don't know what the market's going to do, and we don't need to know either to make money. All we need to know is what we're going to do. So last up, pound Aussie, and this is interesting as well to me. So this is last on my list, because if you look at this, okay, we had this failed structure here. I say failed, it did partially commit, but we had this 1, 2, 3 with the wick there, and there's a value area on the left as well. We started to commit, failed, broke above, washed out the liquidity that was likely still sat there, and then we started to commit, okay, by way of these impulse corrections. Then we had this failed structure here. You might be thinking, well, why did it fail? Well, one of the reasons it might have failed is because if we zoom right out, you can see that in terms of this move from there to there, we have retraced about 80% or more of that move, okay? So it's important to zoom out, and that might be why price is actually trying to gravitate back towards here, because of how much of this A to B leg we've actually retraced. So therefore, when we zoom into here, you're more likely to get failed structures because of the higher time frame direction, okay? Which means that we could potentially capitalize on the failure of this structure, because although we haven't necessarily responded from an area of value, what we have done, if you look at this, we've moved up very impulsively. Let's just have a look at the weekly candle. Would look something like that by the end of the day. The monthly would look something like that. Okay, what we have done is we have broken above. Okay, so we had this consolidation here. We left a gap to there. So potentially that could have been an area of value for a short. Okay, price tried to commit, failed. And what it's done is, at the moment, it's correcting until something tells me otherwise, until we start breaking below here. We are correcting above this sharp hook point, which was the footprint that was left after price broke out of that. So this is suggesting, potential impulse correction continuation to push higher, where typically we would have been looking for shorts from this area, because it was the footprint left after the breakout of all of this. Okay. So what I'm going to be looking for, if we just zoom in, okay, so there's something to touch on here, right? I plan to do this just before I made this video. The other day, or it might have been last week. What is that? Why has it gone like that? I didn't want that. Let's try that. Okay, I don't know why it's that color either, but let's do green, okay? So when you get something like this, I'm going to try and flip this. When you get something like this, so I'm going to show you a bear structure first. When price starts to do that, so if we get a move down, just looking at the time, and let's say this is the start of the structure, price doesn't, it's not typical for price to do that to just tap into that and then go from to the downside from there. When a structure starts like this, what typically happens more often than not is it'll near miss, then you get a bit of a base, then price comes up, then moves to the downside, and then you'll end up with this kind of structure, okay? So I did say that in a previous video, either this week or last week. So with that in mind, why do I mention that? Well, because look what we've got forming here, okay? We've got the same thing but in reverse. So we have a kind of inverse version of that. So what I'm looking for today, because this is a daily forecast, okay? What I'm looking for is at the moment, I'm looking for this. I'm looking for a break below this area of value, which would be the retest at the back end of that, followed by a pushback up and a flag. Why a break below? Because as I've just said with euro dollar, it's not normally the case that we start to build volume above an area of value if we're just going to tap it. Remember me saying that a minute ago, and do that, okay? What usually happens when we build volume just above an area of value is that's a sign that we're going to break below and push back in, which once again would make contextual sense because we've come from an impulse there, okay? And that would take us down to about that area. I've done that crudely, but you get the point, right? What I think is also likely, based on what I've literally just said, and the reason I haven't got this forecast on watch is because this is a daily forecast and this would take longer than the end of the day to form. It wouldn't surprise me if we start missing to this area. Already you can see we're starting to wick to that area. It wouldn't surprise me if we start to push up from here, do that, and then get the inverse of what I just illustrated a moment ago. Maybe it would get more of a base like that, and then we'd get that kind of 1, 2, 3 structure, and then we push up from there. That wouldn't surprise me at all. Okay, but we shall see. We shall see whether the market does that or whether it literally just taps into the area and does what I'm forecasting. So I'm going to move. What I'm going to do is I'm going to move that alert on the fly to just below there, because unless we break below, I'm not going to be interested, and I don't want it triggering unless it does what I'm actually interested in. And then I would, if we get this, a break below, push back in, and then a flag, I would look to get long, and I'll be able to manage this up to there for something in the region of 4.5%. And then my target would be that sharp move there, which was the top of all of this structure there, where there was a big sell-off. So that might be where the liquidity is. Maybe we didn't respond from there because the liquidity is actually there, okay? Which is the origin of this big move. We shall see. Maybe we're pushing a lot higher to fill that longer term direction, which I said, which has retraced 80% of that higher time frame move. We don't need to know. All we need to know is what we're going to do, and then we execute accordingly and safely. So that is my forecast for today, folks. I thought there was some little lessons there that might have been of value to you. But have a great day, have a great weekend, and I will see you again in the next one, and I will update you if I've placed a trade, and if I'm in that trade still in it on Monday, which I likely won't be, I'll update you as to how that went. Have a great day, and I'll speak to you again soon.